Hey everyone, I'm sitting here with David Baker. He's a branch manager for OriginPoint here in Houston, Texas. He's a lender with 21 years of experience. He's gotten multiple awards such as the 5-Star Professional Awards, which is basically an organization that identifies the cream of the crop in multiple industries and then delivers that information for consumers so they know who they're working with. He's also a volunteer with the Greater Houston United Way. He's on the board of trustees and the executive committee. He also does all this while maintaining a marriage of 28 years with 3 kids. He's ran a mortgage business with multiple branches, upwards of 30 to 40 employees at its peak for multiple years. And now he's with OriginPoint. So can you tell us a little bit about it?
No, thanks for having me here today. This is great. Been, again, like he said, been lending in the Houston community for 21 years. I love Houston and I love lending. It's a great thing. It's just a great community and profession to be in. So helping people achieve the dream of home ownership, or whether they're buying their first home, second home, vacation home, those kind of things. It's fun for me. I really enjoy it.
Awesome. Yeah, absolutely. So how long have you been with OriginPoint now?
OriginPoint, not quite 2 years.
Not quite 2 years, but OriginPoint, from what you were telling me, hasn't been around for that long.
That's correct. Yes, we were a startup company a little more than 2 years ago. They started the company in the beginning of 2022. They opened the Houston region summertime of 2022. And so that's when I joined.
Basically, let's look from the perspective of a first-time home buyer that has no prior knowledge of the lending process. Can you give us a bird's eye view of what they could expect?
Okay, sure. So, the first thing we always like to start with is just a conversation. Talk to you about different things in the market, what to expect, how to go. But then what we want to do is get an application from you. So we can talk scenarios, but it's the application, it's the details that we get through the application process and the conversations that we have. Is how we can advise you best, right? There's multiple types of loan programs out there. In terms, you've probably heard FHA loans, VA loans, conforming loans, and then inside of that, what different types of products are there, down payment assistance loans. So there's a lot of loans, and there's not a one-size-fits-all solution, right? That's the one thing I think so many people think about it is, oh, I'm just going to get a loan, right? Well, which loan and all of that. And there's not one rate, there's not one best product. It's really about what's the best product for you to fit the goals that you're wanting to achieve with this purchase.
And then from a prior conversation that we had, and even before I got into real estate, I didn't realize that the lending approval process is heavily decided upon the type of income that you are, or the type of employee rather, based on whether you're a W-2 employee, self-employed, if you own a business. There's a lot of different factors that not only go into just qualifying you, but also just kind of what you do during, for your job, for life, and all that good stuff.
Yeah, so, the main things we look at are income, credit, and assets. Now, depending on how you receive your income, it can be easy or difficult, right? And so those are the things that we talk about when we have those first calls.
Right.
And obviously it can be, it's not something to be afraid of. If you're self-employed, that's not a problem. It's just a matter of, hey, now we need to look at your tax returns, where if you're just a W-2 person, really all we need is your pay stubs and your W-2s. So it's a little bit more in depth depending on how complicated your income can be.
Now, let me ask you this. In your experience, is there a different approval rate as far as, percentage of people that get approved whenever you're a W-2 employee compared to being self-employed, or would you say it's pretty what and what?
Yeah, I wouldn't. I've never really thought about it, right? It's just income, assets, and credit, right? So if you have really decent credit or great credit, and you have income to qualify for what you want to buy, you're going to qualify.
Right, 100%. So David, a lot of times, buying a first-time home buyer, that's going to be the biggest financial decision that most consumers in America are going to make. How does one know when they're ready?
So I would start with talking to a lender that you were referred to by hopefully an agent or a friend Somebody like me, independent mortgage banker, been in the neighborhood or the area for a long time, a lot of experience, right? Just start with a conversation. Get have a list of questions. You might not know what they are. What I find when I'm having these conversations with people is that as we're having the conversation, the questions just naturally come out. Right? Don't think that you have to have a list all written out of what your questions are going to be, because they naturally come out.
Because it's just curiosity.
Right,
Yeah.
exactly. We talk about one thing that leads to a question that, then we answer that question. It's really not that hard of a process. It's nothing to be afraid of, right? Again, for us, that conversation really helps us advise. So that's what we want to be. Good lenders want to we want to be thought of as an advisory role, right? It's not just a transactional situation.
I'm happy to hear you say that, because I was just going to say, I can imagine it's pretty daunting if you're not in real estate or not in any type of financial industry to go and have a conversation about something you may not be privy to. And I can see that being, especially if you've got prior bad experiences with whether it be a realtor or a lender, and they make you feel, dumb, for lack of better words. So it's very important, I'm sure, from your perspective, to kind of nurture a client base and build a relationship with individuals to make them feel comfortable and make sure that they're on the same page with you and are getting the knowledge and the correct answers to the questions they're asking.
That's exactly my goal every single time, is to create a relationship, right? Build that trust. And then once we have that and we know as you're going through it, and sometimes first-time home buyers, they know exactly what they want. They qualify. Everything's smooth.
It's a nice,
but then
smooth
you
transaction.
have the people like, well, I'm not sure what I can afford, and I'm not sure if I'll qualify, and they're a little nervous about the process.
Sure.
Right? That's where creating that relationship and that trust, putting them at ease that we're going to do all the things we need to do to get them approved. And you know what? Sometimes you can't approve them, right? And so from that perspective, then my thought is, well, if it's no today, then what do we have to do working together to make it a yes tomorrow?
Awesome.
Right? So
And
that's
a great way to
important
look
too.
at it. Yeah. So it's almost as if you build a relationship with them, get them comfortable with you as a person, and then you get into the more in-depth root of the problem of seeing what you can get them.
Yeah, and it can be anything. It can be, do we just need to pay down some debt? Or are there some challenges on the credit report that we need to figure out how to overcome?
Sure.
There's so many scenarios, it's hard to come up with all of them.
We could talk for days about it.
Right.
Yeah. Well, to that tune, one thing that I did want to ask you, because a lot of times, people want to rush into buying a home because the narrative is that you shouldn't rent, you're wasting it, or you're throwing away potential equity that you could be getting if you were paying down a mortgage rather than paying rent to a landlord. Now, I've got different opinions on that depending on the individual situation, but I wanted to hear what your rebuttal to that would be. Do you think that it's always a good time, or it's always preferred to buy, and that you should always push to buy a home rather than rent? Or do you think that there's situations where it doesn't make sense to buy a home?
No, I would absolutely agree. There's probably situations where it doesn't make sense for you to buy a home. That's really going to be every individual person, right? But if you're ready to buy a home, right? Owning a home is more than just making a payment. Right. I mean, now you're responsible for it. Where if you're a renter and the water heater breaks, you call somebody. Right. So if you're ready to buy a home, I think you're better off being in the real estate market than not being in the real estate market. But you have to be ready for that commitment. If you're not sure if you're ready for that commitment just yet, then it's probably not the right time.
Right. Yeah, you have to be ready, because it's like we said earlier, it's probably one of the largest financial decisions you're going to make in your life, right? So, well, that's good to know. And then one thing that I think about all the time, just, in situations where I'm out of my realm of competence, I just, especially when I'm dealing with attorneys or anything like that, I don't know law like an attorney would know law. Right. So sometimes it feels like, they're spitting all this jargon and all these terms that I don't experience in my daily life. How do I know I'm not being taken advantage of?
Oh wow, yeah. Well, if they're really trying to push something on you, and you can almost tell. Does it seem salesy? Right. So one of the things that sort of drives me nuts in this market that we're currently in, discount points get sold a lot, and the people, especially the online.com people, they're trained to sell that.
They've got a script.
Yeah, they're trained and they're good at it, right? I combat that almost every day, right?
Mm-hmm.
Now, sometimes it does make sense. I'm not going to be completely anti that, but in a market where interest rates are high, we all expect them to come down at some time in the future. You're likely to waste your money,
Absolutely.
right? So, if you really feel like you're being sold, that would be one of the things that would, make the hair stand up on the back of my neck. Yeah, exactly, right? Now, some people are just fast talking. Who knows, right?
Right.
But most people, and that's where it's important. Work with somebody that's in your market, that's trusted and been around a while.
Mm-hmm.
It's not likely they're going to try to take advantage of you because they're vested in the market. We were talking earlier. I have past customers I run into at the grocery store or at school or at church. The people that are invested in the community or the area that you live in, like we're in Houston, I'm vested in Houston. So we're not trying to get over on anybody, right?
So David and I were talking earlier about the online mortgage originator that, it's just a voice behind the phone call or a name behind an email. David wouldn't feel good about doing somebody wrong in a transaction because he has to see them at church on Sunday or in the grocery store that week. And
Right.
I think that's the point that you're saying is that, some of these online, and I'm not going to name any of the companies, but some of the online mortgage companies are just looking at you as a number on a spreadsheet,
Right.
and just trying to get the transaction
And
done.
they're churning through as many as they can. And for us, again, we talked about that. I mean, we're trying to establish a relationship with you, right? So if it's just a transaction, and some people are that way, they're just transactional.
Sure.
But I would try to establish a relationship because what happens is once you close on the home and you've got your mortgage, the relationship doesn't end.
Right.
It could, right? But I have conversations with past customers all the time.
What do they say?
Things
I mean,
come
everybody,
up.
on average, people own homes 5 to 7 years. And then
Are they coming back for another mortgage, or maybe there's an issue with their escrow account and they're not sure what's going on? I always tell them, hey, call me. I might not be the person to fix it, but call me first so we can go through it. Maybe once we have a chance to talk about it and go through it, you don't really need to call the 800 number.
Right. And I like that you say that because I tell my past clients the same thing. Just because the home has been bought or the warehouse has been sold doesn't mean that when something real estate related comes up in the future that you can't call me as a resource of knowledge, right?
Absolutely.
I do this every day. You do this every day. The average Joe does not. They're competent in their field. We're competent in ours.
Right.
So I think that that's a huge relationship building aspect that we can provide to our clients is just being there for anything and everything, whether it's transactional or not.
Yeah. So it's not, for us, it's not about today. It's about our relationship through your journey. From the time you buy it to the time you might refinance it to the time you sell it and buy another house.
Absolutely. Well, look, to the tune of relationships, while we're on that topic, let me speak from a realtor perspective as well. We were talking earlier about how, these vendors such as lenders, title companies, they'll send you 10 different companies will send you emails every day asking for, to go sit down for coffee. And I do like building relationships, but, realistically, it's hard to have relationships with 10 different people that do the same exact thing in this one market. There's just not enough deals. I wish there was,
right.
But there's just not enough deals going around. So what do you think are the benefits for an agent having strong relationships with one lender?
Well, one where you have to think about it like we're a team, right? So we have aligned goals to get that customer to the closing table as smooth as possible, because what do we want? We want them to refer somebody to us, right? Or we hope, right? That we did such a great job. We wowed them, right? Like I've never had a transaction go so smooth, or you guys were so great. You took the time to explain everything to us. It's the teamwork part of it, right? So if it's somebody that's just looking for transactions, or is it somebody that's really wanting to build a relationship, even lender to realtor, build that relationship, teamwork? How do we create an excellent customer experience?
And I would say, with 21 years of experience, you've managed to find that fine line of building the relationship.
We work hard at it. I mean, every phone call I ever get, that's what I'm trying to do.
Absolutely.
Right? I mean, when we get to the closing table, I love hearing like that was the best process I've ever gone through.
100%.
Yeah.
And as the consumer, let me put on my buyer's hat for a little bit. Like even when I'm buying like a car or something like that, you can tell when somebody's just trying to sell you to meet their quota. And it's just refreshingly different whenever you have somebody that genuinely wants to make sure you have a pleasant transaction, right? So I do think that that's very important. So let's talk about the market a little bit, because that's what everybody wants to know.
Right,
you know, doom is looming right now. And
Cue fire.
That's right. That's right. Nobody really knows what's going to happen this year. You know, the Fed talks about lowering interest rates, but then they talk about keeping them stagnant for a while. It's an election year. In your experience, based on trends that have happened in the past, where do you see interest rates going?
So currently, it's the beginning of March 2024. So mortgage interest rates have been hovering around the 7% range. We're actually a little under that today. As far as the Fed funds rate that everybody talks about, right? That's the thing that gets, you hear it on the news all the time. Is the Fed going to raise rates, keep rates the same? The Fed funds rate is just an overnight rate. It's the rate that one bank charges another bank overnight. But that policy kind of affects the markets, right?
Sure.
So my expectation, and I don't have a crystal ball, and there's lots of people out there that are predicting what's going to happen, right? So currently, the predictions from the experts, right, whether it's Fannie Mae or Mortgage Bankers Association or the National Association of Realtors, they all have rates falling to the low sixes by the end of the year. I think Fannie Mae has it under 6. I hope that's correct.
Right.
I'll say
Don't
that.
we all?
Right?
Don't we all?
But that said, I don't think I would hold my breath for that. And again, I hope they're correct. But what we have to see and what we haven't seen, the reason they keep predicting rates to fall and the reason they haven't fallen at this point is because the economy has remained really strong.
Yeah.
And so what we need to see is some weakness in the economy, and inflation has been kind of sticky, right? That's the other factor here, right? As inflation goes up, interest rates go up. And inflation's come down quite a bit, but it's really sticky in this kind of 3.4, depending on what range or which measure you want to look at, right? But the Fed wants it at 2. So there's still a little bit of work to do, and it's been sticky in this range, and that's why the Fed's like, yeah, we're gonna hold for a little bit. A little higher for longer is a term that you hear a while, right? But I wouldn't, if you're ready to buy a house, whether it's, whether it's the first time you're buying a home, or you're an empty nester and you want to downsize, or the other way around, your family's growing and you want to move up. I think I would not wait for interest rates to come down, right? If this is the right time for you to buy, then I would buy. It's better to be in the market than not in the market and sitting on the sidelines, especially for first-time home buyers.
And that's one thing that I'm not old enough and I don't have a long enough, tenure in the industry to have seen many swings up and down in the interest rates. But I hear, back in, was it the 80s or the 90s?
And I'm not that old, but
yeah, right. But you know it. I mean, there's the interest rates, what, 14, 15%, or were they even higher than that?
I think 18 is where they topped out.
So I think when people see 7% interest rates, they were just used to 2021 interest rates when they were down in 2s and 3s, right?
Yeah.
So
and what that was stimulus. So there was all kinds of forms of stimulus during the pandemic years, right? People were getting checks in the mail and all those kind of things, PPP and all those programs. Well, the low interest rates were also a form of stimulus, because what the Fed did was they came in and purchased a lot of treasuries and mortgage-backed securities. Mortgage-backed securities is the part of the bond market that affects interest rates. And they were buying those and pushing the interest rates down artificially, right? So that's a stimulus. If they hadn't done that, we wouldn't have seen the 30-year fixed rates in the 2s somewhere, high 2s or low 3s is where they were at. So that would have never happened, right? And so you have to think about it, that was a form of stimulus. Now the stimulus has gone away, so rates had to come up. But then we also had this problem of inflation that had to bring interest rates even higher.
Sure.
Right. So, where do we end up a year from now, 2 years from now? Nobody can really tell you. My expectation, if the economy stays relatively stable, then we'll probably end up sort of in the 5 to mid 5 range. is where I think interest rates will level out.
You
at.
think so?
Yeah.
Okay.
Now, when that's the really
That's
crystal
the-
ball question.
Right.
Even saying a rate's pretty crystal ballish, but if we can just get back to inflation under control, moderate growth, I think that's where we'll end up with no stimulus. Right now, if we go into a deep recession and the Fed has to stimulate the economy and they start pushing interest rates down beyond that, that could happen too. I mean, you could make an argument for higher rates, lower rates, or in between rates.
But then that would lead us to kind of a cat chasing its own tail situation, right? Because we'd fall back right into the same situation a few years down the line. It's like putting a Band-Aid on the problem, not
Right.
fixing the problem.
Yeah, exactly.
Mm-hmm.
So,
Well, interest rates are just one thing that, affect the whole housing market. I want to talk about inventory a little bit. How do you see interest rates respond based on supply and demand?
so I don't think the supply and demand in the housing market really has any effect on inventory or vice versa,
Vice
right?
versa, yeah.
The reason we have low inventory right now is interest rate driven. It's kind of opposite.
Okay.
Right? So we have what's called the lock-in effect, right? So you have tons of people that refinanced when we had these artificially low interest rates that are locked in, right? And really for the first time in history, people are looking at the interest rate that they have on their home as a financial asset.
Sure.
So giving that up is a scary thing.
Because they get locked into a 7%.
Right, exactly. So they're like, hey, I'm living in this house, I have a 3% interest rate, why would I move? Right?
Sure.
And so that's why inventory is low. And so from that supply and demand dynamic, what will be interesting to see, and I don't even have a guess at this, I'll guess at a lot of things, but what does the interest rate have to be to release that lock effect?
Right.
That's going to be an interesting thing to see.
Do you
If
see
I had to guess that, I'd probably call it 5.
5? So I'm sure you would agree that, the authorities that predict all these interest rate movements can say all they want, but until we actually see some progress, take it with a grain of salt, right?
One of my favorite sayings is that economists make weathermen look like geniuses.
I like that.
Right?
Yeah.
So, it's anybody and all of us can have a guess.
Sure.
And we can have data behind what we're
And I
predicting.
think it's important to
right?
kind of have the conversation.
Yeah.
That way you stay privy to where it's trending.
Absolutely. And we kind of have to look at the data in front of us and read the tea leaves as best we can so we can advise people as best we can.
Sure.
But at the end of the day, nobody knows what's going to happen tomorrow.
Mm-hmm.
Right? I mean, there could be a new piece of data that comes out tomorrow that changes the entire narrative. Could be positive, could be negative. And the volatility that we've seen in the interest rate markets, I mean, we've seen interest rates change as much as 0.5% in a day. We've seen in a week interest rates jump 1%.
Wow.
And fall, right? I mean, it can go both ways. Right? So that volatility that's in the interest rate markets, that's another thing that's kind of causing people some anxiety, right? Because they don't know, oh my God, I have to have this rate or I can't afford the house or whatever the case may be. There's nothing we can do about that volatility, right? Mm-hmm. We can manage it. We can have conversations if if you're in contract to purchase a home and we haven't locked you in yet, we can have conversations daily and just figure it out as best we can.
Right.
And sometimes that makes sense, right? That's what we call floating the market. So we're in contract, tea leaves kind of seem like rates are going to trickle down. Let's not lock you in. But when you're floating, then you're subject to that.
Well,
right?
I was just going to say I have a friend that was just doing that exact thing, and he ended up getting the bad side of it. He got locked in higher than what he was, and it was not necessarily a pleasant transaction for him. Because it was unresponsiveness from his lender, and he wanted the rate that he was quoted on Monday, but then he didn't hear a response till Thursday, and at that point, interest rates had increased by, I think, 0.2% or something.
Well,
like
and
that.
it happens, like you could be out shopping for a home, so we're qualifying you, and this is the rate we think you're going to get, but by the time you actually get into contract, rates jump.
Sure.
Right? Nobody has control over that. Now, there are programs out there that we call lock and shop, where you can actually lock in an interest rate and then go out shopping. And they do have a float down option. Those are sometimes it's easy to suggest that that's the right thing to do. Where we're at in the market right now, almost everybody believes rates are going to kind of trickle lower, right? So when you do those lock and shop programs, you're not getting the same rate as you get if you waited
a month,
get into contract and try to lock inside of 30 days.
Right.
So, it's just about weighing risks. And so some people that are extremely conservative and risk intolerant, then maybe that's the right thing, right?
Yeah.
If you're a little bit less,
if you like to roll the dice.
Yeah. And you might be right, you might be wrong. And that's, if you're in the market to buy a home, you kind of have to ignore that part of the market, right? Because you'll just drive yourself insane.
Right.
What's the rate today? What's the rate today? What's the rate today?
Well, that's like people that, they buy Walmart stock and then pull up their a Robinhood account and just stare at it all day long. It's like, what do you think?
Did it go up? Did it go down? That's a great analogy, right? And that's really what's happening in the bond markets. It's the same thing. The bond prices are going up and down, which means the interest rates are going up and down.
Right.
And it just happens to be that we're in a period of time that the bond markets have been extremely volatile. And what's interesting about that is bond markets aren't supposed to be volatile. That's the whole nature of them, right? That's your safe asset class.
Right.
Right. But over the last year and a half, in fact, there was a period of time in the last year and a half that the volatility readings in the bond markets were greater than the crypto markets. Try to wrap your head around that, right? That makes no sense.
Yeah, tell somebody that in 15 years.
Yeah, like what? Yeah. And really what, again, if you're in the market to buy a home today and the rates are higher, but it's the right time for you to buy a home, we all expect that the rates are going to come down. None of us can promise you that, but that's the probability of that is very good. So you're just going to end up refinancing that rate to a lower rate. But because the other part of that conversation is the supply and demand in the housing market that you asked about, the supply is likely to remain low. Do we get more supply? Yeah, I think we'll see supply. But I think demand is going to continue to outweigh supply, especially in our market, the Houston market, and really Texas as a whole. People are moving here every day.
Well, that is what I wanted to ask you. I mean, you always hear, and to a benefit for us, that Houston, being the market that it is kind of insulated from what the rest of the nation is experiencing. Do you agree with that?
Oh, absolutely. Like if you think of, there are people predicting a recession. Recessions aren't things to be afraid of, especially with housing, right? If we do go into a recession, rates will come down. So that would be good for housing. And people that bought a house at 7% and rates come down and now they can refinance. So all that would be good for housing. But the other thing is when we talk about recessions nationally, not every state goes into recession. So if we get a recession in the future, it's likely that Texas doesn't go into recession, right? So they look at every state and then of course the national, right? So, again, nobody can say for sure, but my expectation would be if we go into recession nationally, we're not going to see Texas go into recession. Now, would we see Texas slow down? Sure, absolutely. Yeah. But be in an actual recession? Probably not. And so people were still creating lots of jobs. People are moving here every day. I think demand is going to outweigh supply. I just don't know how we change that, right? When people talk about a housing bubble, the first thing I ask them is, okay, if you think housing is going to crash, tell me how supply is going to outweigh demand. Right. Convince me of that, and then I'll agree with you.
Right? Yeah.
But unless you can convince me that there's a way supply outweighs demand, especially in our market, you can't say that we're in a housing bubble or that housing prices are going to crash, right? And there's people out there on social media that are talking about housing crashes and 20% corrections and those kind of things.
But that's because doom and gloom gets more views than positive
Right.
posts. Yeah.
Right. That's true. And so, what I would love, and you can't, right? But I'd love to sit and ask them like, okay, I get where you're coming from, but just tell me how.
Just give me the.
Tell me.
Give me the
how supply is going to outweigh demand.
Right.
Because we have all these people moving to Texas. Texas economy is extremely strong, and we just don't have enough inventory, right?
Mm-hmm.
And so when we still have a lot of home buyers sitting on the sidelines, so not only do we have these people still coming, we have all these people sitting on the sidelines that want to buy a house.
Right.
And so as rates come down, I think what we'll see is more and more of those people decide that, okay, rates are down, let me go out and buy a house.
Right.
And that's kind of the point earlier where if you're ready to buy a house, I would buy a house today and not wait for rates to come down. Because again, if demand continues to outweigh supply, what happens to housing prices? They have to go up.
100%.
They're not going to come down.
I mean, and I think a lot of people don't realize the pains that you'd have to go through with low inventory and multiple buyers,
Right.
Because of favorable interest rates.
And even with 7% interest rates, there's still houses that get multiple offers on.
Yeah.
I have a customer that's lost 5 contracts, and they're offering over asking price,
Mm-hmm.
just not enough.
Yep.
And so it's not like it was in 2021, but multiple offers and that competitive, it's still there.
Yeah. 100%.
Especially in certain segments of the
Now, I
market.
can't say the same thing for maybe Laplace, Louisiana, where I'm originally from.
Right.
Houston, 100%. And I'd go as far to say the entire Texas Triangle, I'm sure.
Yeah, and real estate's really hyper local. So, we're talking about Houston and we're talking about Texas, but inside of Houston and the Houston suburbs, you might in Cypress, great community, great schools. And so well maintained, great houses and great neighborhoods.
Mm-hmm.
Where that's happening.
We're going to continue to see it.
You're going to continue to see it. Maybe neighborhoods that are a little bit dated and the houses haven't been fixed up, that still needs to go through that transition, then maybe not. Those might be sitting there for a little while longer. But the good news about that is you can negotiate.
100%.
So
yeah. Well, that's all great information, David. I mean, I think that saying what you've repeated a couple times, that, if you want to buy a house and you're capable, it's better to go ahead and get in now, because being in the market is always better than being out.
Right.
So let me ask you this. Where do you see yourself in 5 years?
Well, I'll be doing the same thing.
Yeah. It's too good.
I might look old, but I'm too young to retire. So if I won't be retired in 5 years.
I don't think you look old yet, David. So.
Yeah. So no, I'll be doing the same thing.
Awesome.
I love lending. I love working with buyers.
And it sounds like you have a great thing going with OriginPoint, and I'm super
great
eager to see where the company goes.
Yeah. Being with OriginPoint, part of Compass, working with buyers. I mean, that's really I enjoy it. It's I don't really get up and go to work every day. I get up and go do what I love to do.
Well, that's awesome. That's super important. And then if people that are viewing this want to get in touch with you, what's the best way to do so?
So my name's David Baker. You can email me, david.baker@originpoint.com, or call me on my cell phone, which is 832-455-5134.
And we'll be sure to put that in the description below this video. But all right, David. Thank you so much, man.
Thank you.
I really appreciate it. I'm sure people are going to take a lot of good information from this, and hopefully, if y'all know anyone in this Houston market that whether they need a realtor or a lender, we've got some good resources here for you. So
we're here to help.
Absolutely. All right. Sweet.